As the Fed continues to justify the current pace of its ongoing and endless QE, the market is not surprised and is happily gobbling up that extra liquidity. The S&P and Dow are popping to session highs after the Fed's statement, as investors are reassured of the prospect of years of lower borrowing costs. Joining us now to discuss are Boom Bust co-host Christy I and Peter Schiff, CEO of Euro Pacific Capital. Peter, I want to start with you. I know this is the red meat for Peter Schiff. Gold prices head for a third straight gain ahead of that Fed policy statement, and now they're probably up there. What is the long-term potential for precious metals given the current macro backdrop, not just for gold, also as silver, which is also rallying?
Well, certainly the prospects for the precious metals are very bright, but, the prospects for a lot of prices to move up, unfortunately, are not good. The Federal Reserve is creating a tremendous amount of inflation. It claims that its goal is for the cost of living to rise at a more rapid pace than it has in the past. He claims that we need to make up for the cost of living rising too slowly in the past by making sure it rises more rapidly in the future. But I think really what Powell is trying to do is provide cover to maintain the asset bubbles that he denies exist. Even as we were doing this Snowflake IPO today, Powell was telling the reporters that there's no bubble, that there's no bubbles in financial assets, and that all these artificially low interest rates and QE have not resulted in bubbles. But of course, that's exactly what we've been living in. I think Powell knows that, because every time the air starts coming out, the Fed does all it can to blow it back in. But as long as they're doing that, the price of gold is going much, much higher, and that's a reflection of the value of the dollar going much, much lower.
And now, Christy, Bitcoin prices have broken 11,000 again in preparation for another run-up after falling back to its $10,000 support. But is it too early to expect another significant rally in Bitcoin?
Well, we had about 2 weeks of pretty low volatility right now as the crypto market remains stagnant. So unlike previous rallies, which we saw ETH lead the Bitcoin surge, only Bitcoin moved higher this time, whereas all the other cryptos and altcoins, they're still in the red. So DeFi tokens, which had outperformed Bitcoin throughout August, they have been underperforming the past several days. So Bitcoin is kind of rallying on its own the past 3 days, accompanied by negative funding rates. So these funding rates show that traders are continuing to short Bitcoin right now, which suggests that this uptrend is on shorts being squeezed. So the other half of it is that profits from Ether and other DeFi tokens are now being cycled into Bitcoin, leading to increases in the spot prices. So there is a bit of a rotation taking place at this point between the assets at the DeFis, which have been running on full steam for the last 6 months. That's starting to look a little cooked at this point. So I wouldn't expect this rally to be significant until we get some more real volume in.
And now, Peter, oil is actually recovering after optimistic data came out of China showing that industrial production expanded more than it had initially expected. But in order to have stability, we need industrial demand to kick in as well. So will we see a recovery pan out, or is this just temporary blip on the back of Hurricane Sally, which is also causing problems in the Gulf?
Well, we're going to have a recovery in the price of oil, that's for sure. We're not going to have a recovery in the U.S. economy. We're going to, remain in a depression. But oil prices are going up. I mean, the initial impact of the demand shock from COVID-19 resulted in a big drop in oil prices. But as the Fed and other central banks continue to stoke demand by printing more money, and as oil output responds to reduced demand with reduced supply coming from less production, ultimately, we're going to see much, much higher oil prices. As I said earlier, the price of everything is going up because the value of the dollar, the money that people are using to buy things, is going down. So everybody's going to need a lot more dollars to buy the stuff that they need.
Right, and that along with OPEC plus cuts, of course, are driving oil prices up as well. Now, Christy, finally I wanted to hit on this, and something Peter actually mentioned earlier, the Snowflake IPO, where shares more than doubled in its market debut on Wednesday in the largest ever software IPO. What's the latest with that?
So this priced at $120, which was higher than its initial range of only $75 to $85 due to some extreme oversubscription. And then it went on for a big roller coaster ride all day to more than doubling, hitting a high of $319 before then erasing all of its post-open gains back down to $245. So at that point, Snowflake was worth more than $68 billion in market cap at its opening price of $245, which is more than 5 times its $12.4 billion valuation just back in February. So for the sake of comparison, that means it's worth more than VMware, bigger than FedEx and CME Group. So obviously, there's a lot of pent-up demand for IPOs, as this was the first of several tech companies to go public this week after the global pandemic kind of put everything on pause. But as Peter said, a lot of this is excitement, over-enthusiasm amongst investors, and a lot of it is attributed to hype, because this company is only 5 years old, and this is now a record-setting IPO. But we saw for the price action just earlier this morning already that there are a lot of weak hands in this name, riding it for a quick flip, making it very bubblicious.
Yeah. And I feel like
but don't worry, there's no bubble.
This was definitely
says nothing to worry about. No bubbles to be seen here. Pay no attention to what's going on with Snowflake.
All right, Peter Schiff of Euro Pacific Capital and Boom Bust co-host Christy Isar. We are out of time. Thank you both.
Thank you.